first 100 stocks are called large cap stocks. Then from 101 to 250 are mid cap stocks based on the market capitalization. And anything below 250 are categorized as small cap stocks. So typically, the category itself over the last 6 months has delivered an annualized return of approximately 11% over the last 6 months, right? And limit their exposure to small cap depending on what their risk appetite and time horizon for investing is.
To the 21st episode of our podcast series Talks with Daulat. I am Rahul Verma, Content and Growth Lead here at Daulat. Daulat is a tech-enabled all-in-one platform solution that provides customized portfolio solution to investor to invest better and reach their financial goals. Today we have our founder and CEO, Mr. Varun Fatehpuria, who is a NISM certified financial advisor and has worked in renowned financial institution firms like Bloomberg and Blackstone post completing his degree in finance and information system from University from Hong Kong University of Science and Technology. Hello, Varun. Hope you are doing well.
Thanks for having me on the show, Rahul, once again. And it's good to be on the other side of the table after a few expert series that we had done over the last few weeks.
So, Varun, I recently came across a news that read small cap funds saw a large infusion of investment for the past 6 months, which turned out to be the highest among for the past 5 years or so. So that got me curious. That also some AMCs are restricting new investment in those firms, and that would be the topic of our discussion today. So Varun, for enlightenment of our viewers, can you define what a small cap fund is?
Sure. Thanks, Rahul. I think, yeah, that's a topic that everyone is grappling with in today's bull market, especially with the run up in the small cap stocks and specifically the funds that we have seen over the last 6 months. But for the understanding of our audience today, SEBI categorizes stocks based on the market capitalization, which is basically the value of the total number of shares that are outstanding in the market today. So the first 100 companies based on the market capitalization are called the large cap stocks. So you could think of a Reliance or a Tata or a HDFC. All of those are large cap stocks which are held by pretty much all the investors in the country, foreign portfolio investors, so on and so forth. So the first 100 stocks are called large cap stocks. Then from 101 to 250 are mid cap stocks based on the market capitalization. And anything below 250 are categorized as small cap stocks. So typically, again, small cap stocks refer to companies that are smaller in size, obviously, and compared to the large and mid cap counterpart.
Thank you, Varun, for clearing our definition of small cap funds. What's the rage all about in the market nowadays?
So obviously, I think one of the biggest benefits of small cap stocks, the kind of attraction that people have towards this as an investment option, is the potential to generate high returns, right? And I think that is something that we have seen in the market over the last 6 months. So just to give some numbers to our audience today, the category itself over the last 6 months has delivered an annualized return of approximately 11% over the last 6 months, right? I mean, I'm talking about the benchmark Nifty Smallcap 250 total return index from a period of January this year to June of this year. And if we just look at the recent quarter performance from April of June, that has been a staggering 20% return, right? So these are the kind of returns that the small cap funds have been able to generate over the last 3 to 6 months. And it is no surprise that these returns have led to a lot of investors piling into these funds. So in the first half of this year, this category specifically attracted net inflows of over 12,000 crores, which is a really high number and something that has been at its highest level over the past few years, which has led to the AUM of this category to shot up to over 1.53 lakh crore. I mean, that is the size of the small cap fund category in India as we are talking. And obviously, I think once these funds are able to generate the returns, all of the new age investment platforms, whether that's a Ind Money or a Grow or a Kubera, whatever you want to call it, right, in their trending sections automatically, whether that's by design or I think that's just by an happenstance, these funds start to come into the trending section, which also ends up attracting a lot of retail investors, right? So I think this is what's happening in the small cap fund space, and that is the reason why few of the fund houses today have had to restrict investments because there are just not enough opportunities at the right price to deploy the kind of funds that these houses are receiving on a daily basis.
Thank you, Varun, for those numbers. Citing to those returns and numbers, can you explain in some more detail why those AMC are restricting new investment in those funds?
So by definition, Rahul, small cap stocks are lower companies, right? I mean, which typically do not tend to have the same level of liquidity compared to the large and mid counterparts. So what really ends up happening is once these funds start to uh, get the inflows, which are way higher than an average inflow that they have been getting, it starts becoming difficult for them to deploy these capital effectively into the market because again, these companies tend to be a lot less liquid. And that can really create a self perpetuating cycle where these inflows tend to drive up the prices, which in turn drives up the valuation. And that can really cause a hang on the performance over the longer period of time. So I think that's one of the reasons why I think fund managers are being really prudent because they just not see enough opportunities to deploy these funds at a reasonable valuation. Number two, when these things start to happen, and I think this again depends from fund houses to fund houses, but broadly at a market level, what we are seeing is obviously the valuation of these companies have definitely shot up, right? So the price to earnings ratio of the small cap stocks in the universe, which have MF exposure, is approximately 58. And that compares to roughly a PA ratio of 25 of small cap stocks, which do not have any institutional MF exposure. So it's obvious that I think once mutual funds have started taking exposure into any of the small cap stocks, that has led to a huge run up in the valuation of these stocks over the past couple of months. Right, that's number two. And number three, once these things start happening, we see a few of the things which fund managers typically resort to limit their deployment into the small cap funds. Number one is they try and create a more diversified portfolio. But again, this is something that can differ from front house to fund houses, but they typically do not run a very concentrated portfolio or at a small cap level. Number two, they increase the cash and cash equivalents, right? So because they're not finding enough opportunities to deploy capital, I think they hold on to cash and wait for the right amount of time to enter into the market. And number three, that they start increasing the holdings in large and mid cap stocks. Again, by definition, all of these companies need to invest at least 60 to 70% of the money into small cap stocks. So the remaining, obviously, the fund managers have the leeway whether they want to deploy it into large, mid, or small. But again, we see during times when the markets tend to look expensive, at that point in time, the large and mid cap exposure definitely rises beyond a certain threshold, right? So these are basically, I think, what are some of the steps which fund managers typically tend to take when they do not find enough opportunities in the market.
Thank you for Varun for explaining the market sentiments around small cap funds. What would be the your advice to how an investor should position their portfolio right now?
Rahul, as a fund manager, we obviously recommend our uh, clients to limit their exposure to small cap, depending on what their risk appetite and time horizon for investing is. Obviously, I think at this point in time, all of these stocks and the fund category itself is looking extremely attractive. But you also have to go back in time where these funds and these stocks can really deliver subpar returns for an extended period of time. This is something that we had seen in the 2020 market crash, where obviously they fell by a significantly higher amount than the large and the mid cap stocks. And even if you go back in time to, during 2017, right, 2017-18 was particularly not a very good time to be investing into small cap stocks. So again, uh, this category itself as a whole tends to be extremely volatile, right? That is something that people need to keep in mind because again, when uh, people just look at returns and they want to chase returns, they start piling into a specific fund or a fund categories. So always try and limit your exposure depending on what your risk appetite is. Again, as a good rule of thumb, compared to your overall investment portfolio, having an exposure anywhere between 12 to 15% at best is a good starting point. I think if you're able to stomach that kind of volatility and have that time horizon of investing, at that point in time, you can maybe consider increasing this to 18 to 20%. But anything beyond that, again, I think is not a very disciplined way of investing. So try and limit this to what you're able to actually stomach, and do not get again too influenced by the kind of returns that you are seeing today. Obviously these are extraordinary returns that will probably not be able to sustain over a longer period of time. So again, from a longer term perspective, from being diversified, from being I would say patient and disciplined, invest based on what your risk appetite is, and do not chase returns just because something has delivered exceptional returns over the last few months.
Thank you, Varun, for your advice and insights on the short cap mutual fund market. Looking forward to host you in the next episode very soon.
Thank you, Rahul, for having me, and we definitely look forward to hopefully inviting some fund managers into our show, so that our audience can get a better understanding and hear directly from the horse's mouth with respect to the investment strategy at the small cap space. Thank you.